Hey everyone, Abrish here, and let's be real for a second. The crypto world can feel like the Wild West sometimes. You've got incredible opportunities to grow your wealth, but there are also a lot of pitfalls you need to watch out for. And one of the biggest dangers you need to be aware of? Scams. Unfortunately, scams are way too common in the crypto space. We're talking billions of dollars lost every year to shady characters looking to take advantage of unsuspecting investors. But the good news is, with a little knowledge and awareness, you can protect yourself from becoming the next victim. In this video, we're going to dive deep into the 3 most common crypto scams you need to avoid: Ponzi schemes, phishing attacks, and fake exchanges. By the end of this video, you'll have the tools you need to spot these scams from a mile away and keep your hard-earned crypto safe and sound. Alright, let's jump right into the first scam on our list, the infamous Ponzi scheme. Now, you've probably heard of Ponzi schemes before, even outside of the crypto world. They've been around for ages, and the basic idea is pretty simple but incredibly effective at deceiving people. In a nutshell, a Ponzi scheme promises investors ridiculously high returns, often way higher than what's considered reasonable or even possible in the real world. And for a while, they actually deliver on those promises, paying out early investors with money collected from new investors. This creates a buzz, a sense of FOMO, fear of missing out, and attracts even more people to throw their money into the pot. But here's the catch. There's no real investment, no actual product or service being offered. The entire operation is just a facade, a carefully constructed illusion designed to funnel money from new investors to the people at the top of the pyramid. And eventually, like all pyramids, it collapses. The money runs out, the promised returns dry up, and the vast majority of investors are left holding the bag, losing everything they put in. One of the most infamous examples of a crypto Ponzi scheme is BitConnect. They promised guaranteed returns of up to 40% per month, which, let's be honest, should have been a massive red flag right there, but people got caught up in the hype, blinded by the promise of easy money. At its peak, BitConnect was valued at over $2 billion. But then, the house of cards came crashing down. Regulators caught on, the scheme unraveled, and countless investors lost their life savings. So how can you avoid falling prey to a crypto Ponzi scheme? Well, the first and most important thing is to be extremely skeptical of any investment opportunity that promises guaranteed or ridiculously high returns. Remember, if it sounds too good to be true, it probably is. Another red flag is a lack of transparency. Legitimate investment opportunities will be open and upfront about how they make money, who's behind the project, and where your money is going. If you can't find clear and detailed information about these things, it's a major warning sign. And finally, don't be afraid to do your own research. Look up the project online, read reviews, check out forums, and see what other investors are saying. Don't just take someone's word for it. Dig a little deeper and make sure you understand exactly what you're getting yourself into. Alright, now let's move on to another insidious threat in the crypto world: phishing attacks. Phishing scams are all about deception, tricking you into giving up your sensitive information, like your crypto wallet seed phrase or your exchange login credentials. Think of it like this. Imagine you're walking down the street and someone calls out your name. You turn around and it's someone you vaguely recognize, maybe an acquaintance from a while back. They strike up a conversation, remind you of that time you met, and then casually ask for a small favor. Maybe they need to borrow your phone to make a quick call because theirs died. Now, if you're not careful, you might let your guard down and hand over your phone without thinking twice. But what if that person wasn't who they claimed to be? What if they were just really good at pretending to know you, all to gain your trust and steal your phone? That's essentially what a phishing attack is: a digital con artist trying to trick you into giving up your valuable information. In the crypto world, phishing attacks can take many forms. You might receive a fake email that looks like it's from your crypto exchange, asking you to click on a link to verify your account. Or you might get a message on social media from someone claiming to be from a crypto project you follow, offering you free tokens if you connect your wallet to their website. But here's the thing, those links, they're not taking you where you think they are. They're actually leading you to a fake website designed to steal your login information. Once the scammers have your credentials, they can drain your exchange account or empty your crypto wallet in the blink of an eye. So, how can you protect yourself from these digital bait-and-switch tactics? First and foremost, Always be wary of unsolicited messages, especially those asking for your personal information or urging you to click on links. Legitimate companies, especially in the crypto space, will never ask for your seed phrase or password over email or social media. If you receive a message that seems even remotely suspicious, don't click on any links, don't reply, and definitely don't give out any personal information. Instead, go directly to the official website or app of the company in question and contact their support team to verify the legitimacy of the message. Another crucial tip is to pay close attention to the URL of any website you're visiting. Scammers often create fake websites that look almost identical to the real deal, but with subtle differences in the URL. So before you enter any sensitive information, double-check the address bar to make sure you're on the legitimate website. And finally, consider enabling two-factor authentication, 2FA, on all your crypto accounts. 2FA adds an extra layer of security by requiring you to enter a unique code from your phone or email in addition to your password when logging in. This makes it much harder for scammers to access your accounts, even if they do manage to steal your password. Alright, let's talk about the third and final scam on our list today: fake crypto exchanges. Now, if you're new to the crypto world, you might be wondering, how can you even have a fake exchange? Isn't that like having a fake bank? Well, the thing is, setting up a website that looks like a legitimate crypto exchange is actually easier than you might think. And that's exactly what these scammers capitalize on. They create these slick, professional-looking websites that mimic the design and functionality of real exchanges. They might even list fake coins, offer enticing trading fees, and display fake trading volume to lure you in. But the moment you deposit your crypto into one of these fake exchanges, it's gone. You'll never see it again. These scammers are basically running off with your money, leaving you with nothing but a fake account balance and a whole lot of regret. So how can you tell the difference between a real crypto exchange and a fake one? Well, the first thing you should always do is check if the exchange is properly regulated. Reputable exchanges are required to obtain licenses and comply with regulations in the jurisdictions they operate in. This information is usually readily available on their website, often in the footer or on an About Us page. If you can't find any regulatory information, that's a major red flag. Another important factor to consider is the exchange's reputation. Do your research, read reviews from other users, and see what the crypto community has to say about the exchange. Legitimate exchanges will have a track record, a history of positive reviews, and a community presence. Fake exchanges, on the other hand, will often have little to no online presence, or they might have overwhelmingly negative reviews from people who've been scammed. And speaking of reviews, be wary of overly positive reviews that sound too good to be true. Scammers often create fake reviews to try and boost their credibility. Look for reviews that provide specific details about the user's experience, both positive and negative. These are more likely to be genuine. Another red flag to watch out for is poor website design or functionality. Legitimate exchanges invest heavily in their websites and apps to ensure a seamless and user-friendly experience. If an exchange's website looks unprofessional, has broken links, or is riddled with spelling and grammatical errors, it's a sign that it might not be legitimate. And finally, be extremely cautious about depositing large sums of crypto into any exchange, especially when you're first starting out. It's always a good idea to start small and test the waters before making any significant deposits. This way, if the exchange turns out to be a scam, you won't lose your entire investment. So there you have it, 3 of the most common crypto scams you need to be aware of. Remember, knowledge is power, and by understanding how these scams work, you can significantly reduce your risk of falling victim to them. The key takeaway here is to always be vigilant, do your research, and never be afraid to ask questions. If something feels off, trust your gut and walk away. There are plenty of legitimate opportunities in the crypto space, and you don't need to risk your hard-earned money on shady schemes. Now, in the next video, we're going to shift gears a bit and dive into the exciting world of crypto trading. I'll be breaking down the basics of how to buy, sell, and trade cryptocurrencies safely and effectively. So if you're ready to take the next step in your crypto journey, make sure you're subscribed and hit that notification bell so you don't miss it.